Hi everyone, let's cover my Elliott wave scenarios on Bitcoin, starting with the first bullish scenario where we are currently still working on wave 4 and expect another wave 5 to the upside to all-time highs. In this particular scenario, the green wave 4 is then internally labeled as a regular flat, a three-wave structure to the downside in a wave A sharp zigzag family structure to the upside in a wave B, which also is the most common structure in a wave B. And then you look for a wave C to the downside. And due to the nature of this first structure to the downside, which of course looks incredibly three-wavy, the probabilities are higher that wave C is then an ending diagonal structure. So we then have three waves in a wave 1, three waves in 2, sharp a three-wave structure in 3, then we look for a 4, and eventually a wave 5 to the downside. Now we do have some support to the downside to then finish this third leg here to the downside, 1, 2, 3. We have hit this blue box here, sitting between 96.2k and 96.9k. It also is the area where we have the golden pocket taken from this low to the all-time high. Toggle on the golden pocket and you can see the 0.618 actually has been touched. And then just below we also have a very interesting support here between 94.1k and 94.9k. Preferably one of these two supports will hold to then finish your wave 3 and then start a wave 4 towards the upside. Now you can see I also have a blue box here to the upside, 101.9k to 102.3k, some interesting resistance, and then another move to the downside expected, which is your wave 5 of your wave C to then finish wave 4. Now the final area of support here is 91.492k, would be very interesting then to finish your wave 5. So preferably, in other words, with your third wave down, we do not go this deep. We would look for support at one of these two areas, a move to the upside, a zigzag family structure, so a 5-3-5, or possibly a WX and then a wave Y to the upside, and then get another three-wave move down. We have the 886 here as well, which can be interesting confluence with the support area. And finally, you see that I have a red 1-to-1 trend-based fib extension. Now this red 1-to-1 trend-based fib extension is taken from this high to this support box to this high over here. And basically what it means is that the invalidation for this ending diagonal is 90.4k if price would indeed find support here and resistance there, because it's of course a bit hypothetical, but wave 5 is not allowed to be longer than your wave 3 in a contracting ending diagonal, which is the most common ending diagonal structure, a contracting diagonal. So 5 is not allowed to be longer than wave 3, and we do have interesting support here. I chose the lower support just for the sake of getting this 1-to-1 here below this final area of support. Now after this wave C, we then look for price to move towards the upside impulsively. Of course, that won't happen in a straight line, but basically what you're looking for is 1, 2, 1, 2, and eventually you get your wave 3 towards the upside. Now, mind you that in flat structures, there is always the possibility to take the low of wave A. However, for this ending diagonal to take out the low here of wave A, you would really need to have a deeper wave 3. So then 3 has to preferably move all the way down here, then get a final bounce, overlap with 1, 1, 2, longer 3, 4, and then 5. That would be a way to get all the way down there, but if price is going to bounce on one of these two areas, it is very unlikely you're going to take out the 89k low, but at least I wanted to mention it. Now, the second scenario is actually your more bullish scenario, arguably, because in this particular case, this is a 2 and you look for a wave 3. Depends actually which one you find more bullish, because here we finish 4 and then we only start still a wave 5. So in both cases, we look for price to still move to higher levels. But here we then have our 1, 2, 3, 4 already finished. And then a wave 5 is already starting. So this is wave 1. Should probably label it in a different color. Let me make this green. Not that one actually, this one here. Let's label this green. So inside wave 5, the green wave 5, we then have the blue one already finished, then 2, 3, 4, 5 towards the upside. Invalidation very clear, 89K low. You do not want to see price move below that low. Now in wave 2, you then need a 3-wave corrective structure to the downside. And the most common target for your wave 2 is between the 0.5 and the 786 Fibonacci. And you currently see the golden pocket to 786 on my chart because we hit the 618. Now if we look at this corrective structure, then you would need to count this now as a wave A, 5-wave move, B, running flat structure, and then a wave C to the downside. And of course, the internal counts are not all too nice, but that would be pretty much the only way to really count a nice wave 2 here, nice quote unquote, because this is actually a lower probability scenario, because your wave B is, first of all, incredibly big compared to wave A. So if we take a fib time from the start to the end of wave A, you can see that wave B is very, very long. It's much longer than 6 times the time of your wave A, which is very uncommon for that to happen. Besides wave B in this scenario, that has to be counted as an A, B, C, which is a running flat as we didn't take the high. And also counting this move to the upside as a 5-wave structure is not ideal. So this is more like, it's a little bit forced in a way, but this would be your impulsive count. Alternatively, you can consider moving this wave 1 to the lower high over here. And then we remove the ABC to the downside. And then we count a wave 1, 2, 3, 4, 5, which actually, if we want to count this as an impulsive move to the upside, then preferably you would end it over here. That would work nicer than ending it over here. The issue again is the corrective structures. Then we have a running flat to start, and that is then your W. This becomes your X, and then you have a zigzag down in a wave Y. And also here, you can then see that your wave X is really big compared to your W, over 6 times the length compared to your wave W, which again, it just lowers the probability. So this count is not as clean as the count with the diagonal to the downside. If we then look at the news upcoming week, then on Monday, the 3rd of February, we have some high impact news of 4 p.m. Central European time. Make sure you trade safe. And then we also have news on Tuesday, on Wednesday, and on a Friday. So it might be a nice volatile week. And if we then finally look at the probabilities of the different scenarios, then at the moment, as explained in the analysis, the flat structure, the blue polyline, would have a higher probability than the white polyline. And personally interested to keep an eye on the 2 support areas that we have just below us. This is number 1. And this is number 2 over here. Those are areas of interest, areas to observe the reaction and look for potential signs of strength, whatever that is for you. Now, one thing I shortly want to highlight before I end this video is that the bearish count is, of course, a finished bull market count. This is very much an alternative scenario, but just to be complete, 1, 2, 3, 4, a 5th leg here on logarithmic scale to the upside, 1, 2, 3, 4, and then a wave of 5 on a weekly time frame. And then on a daily, of course, alternatively, you then have here a 1, 2, 3, a 4, 5-wave structure. However, if this is indeed a finished 1, 2, 3, 4, a 5-wave structure, and we would look at a finished 5-wave move also on a weekly time frame from 15K all the way to the current all-time high, then preferably this move towards the downside is impulsive, not corrective. And if we go to the 4-hour time frame, by the way, the reason you want it to be impulsive is to get a very deep retracement. But if we go to the 4-hour time frame, then we can very much see that this move, this first move to the downside, is very 3-wavy, very zigzaggy, and not very impulsive, right? Maybe the first move down, but eventually you needed to have a 1, 2, 3, 4, 5 correction continuation. This is best counted as a zigzag structure, and a zigzag structure is not an impulsive structure. You would only have maybe then your diagonal, 1, 2, 3, 4, 5, correction, that's your 2, and then a move down. But the diagonal, well, we've covered it in the bullish scenario, and only once we have potentially then a finished diagonal are we going to consider covering the bearish scenario as well, and counting this as a 1, 2, and this now a wave 3 to the downside. Low probabilities because of the incredibly big size of your wave 2 compared to your wave 1 here to the downside. Now, I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.